The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 15th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, you and I, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what it is they're communicating to you and I, where price is headed to. And what I want you to know is I'm absolutely grateful for your presence here. So feel free, pick up that phone, dial on at 877-927-6648. Internationally, 727-445-1044. This is terrific Thursday. Of course, it's the Hotel California. We don't let you out. It's sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 121 points, trading at 17,046. S&P up 16 at 2,010. NASDAQ Composite up 42 points at 48.24. Russell's up 5.5 points at 11.42. The DAX closed up 148 points. The FTSE closed up 69. Gold is trading up $7 at 11.87. Silver's up 3 pennies at 16.55. Light sweet crude is off 57 cents right now. Natural gas back about 4 pennies. Leading the charge, the upside, stock that absolutely got hammered yesterday, BoFi Holdings, that's up $15, little counter trend bounce. Dexcom is up about 16%, nearly $12. Amazon's up $11. 5 Prime Therapeutics, that's up 60%, so they have saved something out there. That's up $10. Google is up 9. Priceline is up 8. We got to go take a look at Priceline. It did have a tough day. I think it was yesterday, so we'll go check in on that. The IBB is up about $6.50 to the downside. We've got Valiant Pharmaceuticals. That's off $12, about 7%. Marriott Vacation is gone on vacation. They're down 15% with some decent volume, I believe. We'll go take a look at that stock chart. Netflix out with earnings after the bell yesterday, down about 14%. We'll go, 9%, down about $10. Seagate is the one that's down about 14%. That's off about $6.50. So we'll check in on some of those stocks. Chipotle's off about $4 as well. But first, let's begin on understanding what is it that the markets have been doing, in essence, most of the morning. So to do that, what you and I are going to do is we're going to go take a look at what's going on in our 120-minute time frame out here. And we're going to look at, if you're looking at this on Tiger TV, I hope that you are, you're going to see in the upper left-hand panel, that's going to be the NASDAQ futures contract. Upper right-hand panel is going to be the ES Mini, the S&P futures contract. The lower left is going to be your Russell 2000. Lower right is going to be the Dow. Now, the key to today as to what's going on, we've seen the ES Mini. I'll go ahead and blow this up on my screen here, make it a little bit easier for you to see. And what we're really checking in on are the market profiles as one of the indicators as to where price is headed to. You can see that we've really been trading in what would be considered a fairly narrow range from the 1990 area up to about the 2002, which is where we're priced at right now. Now, the top of the box, top of our task market profile, 2001.75. We're going to call it 2002. You can see that that level is under attack. This is a 2-hour chart, which means that the candle that is in session right now finishes in about 49 minutes. If we see a close above 2002, and that'll mean 2002 and a quarter, but a decent close above that level, prices ought to be able to, well, where will price head to? First, you'd have to say that price will at least get into that spike at 2014.75. But at this stage here, if the ES Mini is able to close above this 2002 level, where it goes will no longer be its work. You see, the ES Mini, the S&P futures, is the one that's really trying to bust out a resistance level. Once it busts that out, then it will signal to everybody in the behind out there, behind them, that's drafting them, that it's time for them to take over and do all of the heavy lifting. Likewise, if we come in at 2 o'clock, we don't see a close above 2002, you should anticipate that price will pull all the way back into the level of about 1992, maybe a little bit lower. Now, if we take a look at, and we put this all together, now we take a look at the other three equity futures contracts, what you'll see is the NASDAQ is the one that's got more room to go to its resistance level, which is priced at about 43.85. We'll call 43.84 and a quarter if we want to get exact. So if the ES Mini is able to close above its resistance level, the NQ will be the one that would push things higher and into the 43.84 level. Not that it can't close above, and I would anticipate that that's really what the setup is out here. And if the NQ can close above 43.84 today, or during the trading session, then it's going to send a signal back to the Dow to say, okay, it's now time for you to do all that heavy lifting. And if we take a look at the NQ in the upper left-hand panel and the Dow futures, lower right-hand panel, what you're going to see is their TAS market profiles, their point of control, it is closer to the bottom of the box, closer to support. Set up from a bullish, really we would give that an interpretation that the bulls are really defending that area, and they should have the energy to at least drive price up to the top of that box. Now, inside the Dow, that level would actually take you into 17,017. But the first signal comes from the ES Mini, trading right now, right at the top of that market profile. This could be the extent of it, that little push out there. We'll know as we come into the 1:15. I'm sorry, the 2 o'clock. The 2 o'clock time frame. So make sure we'll go back and we'll take a look at that. So that, in essence, is what the market is doing. At least the equity markets out here. We'll take a look at individual stocks. Let's go check in on some of the commodities and the currencies out here. Let's go take a look. Our first stop. Let's go take a look at silver. Silver not doing a whole lot today as we speak, so giving us that little, what looks like could be a doji candle, right? Up at resistance, potential resistance, says that the market is getting a bit tired, potentially tired out here. If we go take a look at A to B equals CD patterns, that's certainly, and that's our lightning bolt pattern. That's where, you've got, what's that ad out there? Is it Progressive Insurance? What's the gal's name out there? Well, she's got the name your price tool. The A to B equals CD is our version when we take a look at the chart of name your price as to where price is headed to. Flow. Thank you, Terry. Thank you, Tucker out there. And so when we take a look, and the nice thing about the A to B equals CD tool, our lightning bolt tool, is that simply it does 75% of the work for us. It not automatically, but it provides us with an A, a B, and a C. And all we have to do is just really pay attention to that D leg out here. Now, we can see that price coming off of that C point, huge acceleration on the trading session of October the 2nd out here. That was immediately telling us that price was going to, in the case of silver, is going to do more than a one-to-one A to B equals CD, which only, on average completes a one-to-one about 60% of the time out here. Then we're off to the next level. Now, that next level, 1625. If you can see silver cross above 1625, we don't have any kind of reversal signal yet, then the price of silver ought to make its way up in that 1676 area. Now, if we take a look at a retracement from the high out here from May the 18th, then we're looking at a daily chart. We're looking at the current contract out here, the December contract. What we'll see is that the 0.618 retracement level is $16.36. Now, we're basically close to it. We're, at 12, 15, whatever it is, 36. I can probably do this math out here. So we're about, 20 cents, 22 cents away from that level. That's close enough in my book. But we don't have any kind of reversal candle today. Even if it's a doji, it's not a reversal candle. You've got to be patient and wait. It just tells you that the market is tired up near a potential resistance level here. And until we get that reversal, what is absolutely in play out here is $16.76, maybe even $17 and a penny, right around that range out here. So that is in the silver contract. If we go take a look at Goldilocks, see what she's doing, $1,185, what it's trading at, up about $6. Again, the same kind of scenario. If we take a look at the A to B equals CD pattern, our A point down here on July 24th, our B point out here on August 24th. Here's the 75% of the work that the market has done for us. We just go take a look at that next low swing point down on the trading session of September the 11th. We can see that gold is weaker than silver. So gold, how do I know that? I take a look at where price is traveling on the C to D leg. In this case here, gold is very close to completing its 1-to-1 A to B equals C. That's at the 1193 level. And again, if we take a look at swing points, there's really two of them that we can focus on. You know, we could come all the way back here to January, which we can do, or we could take this swing point out here from May 18th. I believe it was the May swing point that we looked at in the case of silver. So let's go ahead and use that May swing point in the case of gold. What we can see is that price is above the 0.618 retracement level, completing the 1-to-1. Looks like price ought to get to 1194 to 1199. No reversal candle or signal as of yet. Now, it may not be able, and this in the case of gold, it may not really be able to get above or close above the high of yesterday out here. And the reason I say that is if we take a look at gold on the 120-minute time frame. I'm gonna switch over. We'll take a look at two charts here. This chart here clearly shows, and we took a look at this yesterday during Tom's show. We were looking at a 2-hour chart, and we were noticing that gold, even though it had a nice move higher in price yesterday, even extending that a little bit today. I won't say extending price because, well, yeah, extending it today, yes. In fact, indeed, it did. How do you like that? Price has been moving higher with less relative strength out there. It's always an early warning sign that the market is getting tired and it's ready to do something else, retrace, correct, whatever it might do out here. Now, in the case of, I'm going to switch this over so we can see that, and that's the black diagonal lines on the top of my chart going to the upside. I'm going to switch over to the 120-minute time frame chart here, a little bit easier on the E-signal chart, easier for you to see, at least with regard to what I want to point out. Because, you know, what we have that has occurred right here on this bar, and this was a little spike that took place between 8 and 10 a.m. this morning. We had a little bullish engulfing candle that actually occurred here at the close yesterday at 4 p.m. And that was, you know, with price moving higher with less relative weakness, that was a sign of a reversal out here. And if we take a look at the high, because it's the high of the candle that was engulfed, that 1189.90, we then had a key reversal bar that took place here between 8 and 10 this morning. This is telling us just how important this 1189.90 level is. Now, what that also tells us, if you see a close above there, nothing more bullish than a failed bearish pattern out here. I won't call it 1189.90 that you need to see a close above. You now need to see a close above 1191.70. And if you get that, higher prices coming at us. And inside of Goldilocks, that says 1199 to 1219. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We got the S&P up about 17 buckaroonies out there. We're going to go out to California and speak with our man, Brent. Brent, thanks for calling. Thanks for holding. How are you doing today?
I'm doing fine. How are you doing today?
I am doing very well. Thank you so much for asking. And you wanted to take a look at light sweet crude, I believe. So tell me what you're doing, how I can assist you.
What I'm seeing, it seems to be in this consolidation it's been in for, I don't know, a couple of months now.
Yes.
But it's getting towards the lower end of that range. And it's kind of a little bit of a rounding pattern at the bottom there. I don't particularly like the candle it put in at the top there around 51.
Yes.
But I just wanted to get your thoughts on it and see what you're thinking. I've had some success trading this range, and it is getting towards that lower end of it. I just wanted to see what you thought about it.
Absolutely. So I'll give you a couple things to chew on here. The first is, and I'm going to pull up a chart of the 30-year Treasury yield out here. And you might say, well, what the heck are you doing that? I called about light sweet crude, and you did. Now, I can't do this on the air. What is I'm going to suggest that you do, but you can do it manually. And if you take the Treasury yield chart and you push it out about 3 weeks, So push it forward by about 3 weeks. What you're going to find is, for whatever reason, there is a correlation as to what's going on in the Treasury yield chart and light sweet crude. So I'm just going to go ahead and throw that out there. It's not perfect, but it's really pretty good out there, and it's at least worth noting. And that being said, then, this would actually suggest to me that you might want. We'll go back and actually take a look at it, because we've got October 2nd is where there was a low. If we add 3 weeks to that, that would give us. We'll use this calendar. Well, you've got to use trade. Well, yeah, we'll use a calendar. So you've got 21 days. That says maybe around the 23rd. Is when we ought to see our next, if in fact this correlation continues, we ought to see our next bottom out there in light sweet crude. So that's the first element. But I'd say go put it out there, see if that works for you, or see if I'm just, full of who knows what. Now, the second element out here with regard to it pulling back in some type of trading range, you'd want to watch for the price level, I would say, of 44.66 to 43.89. That is the bottom of its consolidation. And at the 43.89 level, on a weekly basis, that's its TAS market profile point of control. So price basically is really comfortable right around that level and finding support. We also happen to have a new daily box that appeared about 3 trading sessions ago at that 44.66 level. So I would say you could also go ahead and fire away on that trade, and as long as when price pulls back into that area, and as long as you get a close above 43.89, you're okay for whatever your trading style might be, which could be to ride it up to the top of the consolidation in the 49.27 level. Now, what's interesting, Brent, about the new box that appeared, the new daily box that appeared, is that the point of control is really close to the high of that new box. That says that there's some really significant resistance up at the top of that consolidation area. So unless you're coming into it, not you, but unless light sweet crude is coming into it with some volume or wide-ranging bar, that's probably the time to go ahead and exit the trade. That's at least what it looks like to me. Is there something else that you're exactly right with regard to that pullback after the little doji up at that resistance level on October 9th? You had a nice little wide-ranging bar to the downside, but now they're starting to get smaller and smaller. We do have a test, it looks like. Today's candle is testing. It looks like the high of September 24th. So that high was 45.18. The low today is 45.23. So we don't have a complete test of that level. Are you going to trade the actual contract, Brent, or are you going to trade like USO or some other vehicle?
Yeah, it would be the USO, it would be call options on the USO.
Okay, so let's just kind of gauge volume. I think it was September 24th we were looking at. And inside the USO, folks, which is the United States Oil Fund, that has volume of 26 million shares down there. And today, you're down with 21 million shares. So just simply from a volume metric standpoint, if we take a look at, I don't know if the volume will go ahead and keep up, but 21.6 million shares today says it's going to do somewhere around 35 to 40 at the by day's end. And if that's the case, price is moving into that September 24th level with volume. And, you wanted it to come back with lighter volume. I see we've got a hard break. Can you want to hold on through the break?
Sure, Steve. Thanks.
Okay, we'll go back out to Brent in Martinez, California. We'll finish taking a look at USO, and maybe there's some other things that he'd like to look at. You too can call in 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 133 right now. S&P is up 17. We're going back out to Martinez, California. We're speaking with Brent, and we're taking a look at light sweet crude. During the break, Brent, one of the things that I did was took a look at the 120-minute time frame chart for light sweet crude. And what I noticed was, let me do this here. Let me turn off the daily and weekly profiles for you. That way it will stick out a little bit better for you. So give me a moment just to turn those off. We're looking at the white horizontal lines on my screen out here. And what we can notice is that all of the new market profiles continue to be formed, you know, making bottoms out here. And the price of light sweet crude here, just during this last 2-hour time frame, you know, is in essence really up against resistance. It's trying to get back inside that box out there. But it would need to, if today were the day for you to enter the trade here, you would at least want to see it close above 46.94. And that is the 120-minute time frame profile. Now, what's kind of cool about that let's say there was a bottom put in today. We've also got a short-term trend line, just simply coming off of the high from back on October the 9th. Otherwise, if we don't see that, I think what you can anticipate, is the daily and weekly profiles being the levels where you'd want to take a look at the trade, entering USO. And you might see that take place before anything would actually set up, inside of USO. In about a second here, a couple of seconds, we ought to see this chart populate with its 120-minute profiles, which, as you can see, is just a little bit different picture than the actual underlying instrument. But I would go with the underlying instrument information as opposed to what shows up on the actual ETF. So I hope that assists you. Or what questions, have I now posed for you?
Oh, you've answered, I think, all the questions. At this point, I'm employing the Tom O'Brien hands in pocket scenario. And I'm going to be patient, and I really am looking more for the area that you suggested earlier, down around, the 43 to 44 range. If it gets there, great. If it doesn't, and I don't even necessarily have to do that trade I have.
Yeah.
I was fortunate enough to have bought a lot of the different oil stocks and things in that related area when they were lower. So I'm going to benefit if it's moving up, I guess is what I'm getting at.
Yeah. Hey, look, Yeah, for sure. I mean, we've seen some big movements in some of those oil stocks, and I would say just stick it on the 120-minute time frame. Watch that trend line as well. That would be an indication that you could also take a play out there. I didn't see anything else, as far as trying to buy the bottom, any type of wave count or anything that would give you an advantage for coming in the trade early. So I like the hands in pocket scenario at the moment.
I think so. Do you have a second just for one other? I wanted to ask you if you could take a look at potash, and do you consider that to be an island reversal off the bottom there? Because there is a gap that was put in September, kind of towards the end of September, and then there was a gap off the bottom in October. Do you consider that to be a
I don't, because for my work I don't. Let me turn off these profiles here for a moment. That way I've got a clean chart altogether for you. And what Brent's referring to, folks, is when you have equities or commodities or anything form a island top or an island bottom. In this case here, what we're looking for is, I'm going to switch over and first take a look. I'm going to put up the New York Stock Exchange for you, and then we'll go back and take a look at potash. But it's going to be easier for me to explain what the island bottom needs to look like. And in this case here on the New York Stock Exchange, we saw a clear gap to the downside between the trading session of September 21st and September 22nd. So we see we've got a nice wide gap in there. Price goes ahead and it forms a little rounded bottom out here. That on the trading session of October the 5th, we came back to work. October 2nd. The high and the low of October 5th, we have a gap out there. And that is really what creates your island reversal. You need at least a one tick, difference in price that's void of price is really what I should say. And so if we so that's what an island bottom would look like. If I go back and take a look at potash, POT is the ticker symbol, I think you're looking at maybe like, you say September, you're looking at the September 25th to 28th area. Because the low of September 25th is 2055. The high of the next session is 2054. So that's a 1 penny gap. So that would qualify out there. But actually that gap got filled because price went to 2074 on the trading day of October 1st. So there really is no gap out there. You know what I mean? I like to see a clean break. Now, in the case of potash, there is a fairly wide gap out here, Brent, between September 21st and September 22nd. You're quite a ways away from that high on September 22nd, which is 23.22. But that would be the next area where this individual stock could, in fact, form, a very large island bottom. Have you taken a trade to the long side inside of potash?
I am long the stock around a little over $20, like I think 20.63 or something like that.
Okay, excellent. So you've got a nice trade there. If we just take a look at potential natural resistance zones for you, you've cleared the daily market profiles, so that's a beautiful thing. So, pulling back to the 2170-ish area and testing and rejecting it is fine. We'll turn those off. Just take a look at weekly profiles out here. And on the weekly basis, boy, this says it could easily run up into the 2501 level before this runs into resistance out here. You've got that nice sign of strength from October the 7th. It's it's light in the shorts and being able to go ahead and take that high out with any kind of volume, 2220. But that doesn't mean that it can't at least run up to that gap that you and I were looking at from September 22nd to September 21st. That would also be a natural area of resistance out there. So you at least ought to get that type of price movement inside of potash.
That sounds great. I really appreciate you taking the time, Steve. And
no problem. My pleasure.
Have a great day, okay?
Okay, you do as well. That was Brent in Martinez. Let's go out to San Jose. We've got the Californians, not from Saturday Night Live, but the Californians are up and at 'em. Let's speak with Sam. Sam, thanks for calling. Thanks for holding. How are you today?
Hey, I'm doing good, Steve. How are you?
Excellent. Thank you for asking. And you wanted to take a look at First Majestic Silver. So
Yes.
Tell me what you're doing, how I can assist you.
So I bought an initial position in AG at around 375.
Okay.
I was trying to, since the gold and silver are moving up, I was wondering if, I can add on to my position.
I would. So you're around 375. And let's go take a look at just simply what this equity has done at this stage. Now, I don't know what took place on September 18th out here, but you had huge volume. You didn't have wide price spread, but you had huge volume, 18 million shares on that date. Nonetheless, if we just take a look at normal A to B equals CD patterns, and what that is, Sam, that's it's kind of what we refer to as a lightning bolt. It helps us to identify different levels of where price can head to. So our A point out here, I just have to grab the right tool. If I don't do that, there are A points down here on the trading day of September 11th. The B point that I would be using looks like it's either the high on September 18th. Let's see, 337 or 330. Yeah, so it's going to be that high. Pulls back into makes a bottom down here on September 30th. So this has already made a 1 to. It's on its way to make a 1 to 2 A to B equals CD, which is up at the 435 area. Typically, when a market makes a 1 to 2 A to B equals CD, Sam, it usually does something else, either moves sideways or goes ahead and pulls back. So your ideal at this stage here, it seems to me, and let's go take a look at, this, I would imagine that AG, First Majestic Silver, is going to also move, with the direction of silver as well. And I think that silver is getting ready to move sideways or at least retrace out here. Its short-term price oscillator is really in the overbought territory, and so it needs to work that off. Now, it can work its way off by just simply moving sideways, but I would say a better place for you to add as opposed to 4 1/4 would probably be pulling back and testing 390 on lighter volume. Or even if we see a little bit larger pullback in silver, 352 would be the spot to enter. Now, I think you said you were in around the 370 area?
Yeah.
Yeah. So, you probably aren't going to be real happy if it, in fact, pulled back to that 352 level. But that would actually be the most logical. So we've got the A to B equals C. Now, that doesn't mean that it has to stop at 435. It can keep on running. But it's just logically speaking and pattern-wise, and there's no reversal signals or anything, it suggests that it wants to pull back. On the positive side today is that it looks like it's trying to close a little bit of a gap out here, a resistance level that's at about $4.17. And it's got pretty good volume as it goes into that area. So I could not discount for you that Majestic Silver doesn't want to go ahead and make a run all the way back to the swing point from June 18th in the 540 level. But trying to buy it and add right here based on having looked at silver, and silver's giving you a little bit of a real timeout message today. You know, it hasn't done anything. It's about to complete its 1.272 A to B equals CD. You've got a little bit of a doji style candle potentially forming today. I think it's more prudent to, you've got a winner, let that go ahead and run. And make sure that you've got some stops in place on that. That would be my best recommendation on ticker symbol AG. But what questions have I not answered, or what have I posed now that's a question for you?
No, I think you did a great analysis, So I'll wait to see what the stock does in the next couple of days. Would you have time to look at Yamana Gold EUY?
Yeah, we can do that. We can do that right now. Now, I wouldn't be surprised to see AG, First Majestic, punch up and tag the 438 level. So just another 7 cents, well, another 13 cents or so higher, which is your 0.618 retracement level. And you want to take a look at Yamana Gold. AUY is the ticker symbol. So tell me what you're doing here and how I can assist.
No, I'm just thinking about taking a position, I guess it's because of the move in the gold. So I know this has also run up a lot.
Let me show you something inside Yamana Gold that is kind of interesting compared to maybe a couple other stronger stocks. And on Columbus Day, on October the 12th, we saw a pretty good pullback in all of the mining equities out here. And it created a key reversal type session, bearish engulfing. We see that here present inside of Yamana Gold. And it pulled back on a holiday trading session with 13 million shares. And today, you're up into that level with 8.4 million shares. So that's the first thing that says, there's some problem here inside of Yamana Gold, because it's only going to do maybe, 13.5, 14 million shares going into, well, no, I take that back. What did I type in here? Let's see. It's 146, so we've been trading for 4 hours. Let me make sure I've got my volume characteristics here correctly. 8.4. No, it actually says it could do. I don't know what I'd have to go take a look at I'll just do it real quickly. Let's go see on the 30-minute chart where all the volume came in on this. If it's great, yeah, it was all really at the open. So there's no chance that this thing is going to take out that high, and it hasn't taken out that high. So let me first give you some potential buy areas inside of Yamana Gold. But my point is that it's a weaker stock than some of the stronger ones that are out there. Inside of Yamana Gold, an ideal pullback for you to take a look at is probably around the $2.04 area. So if, in fact, it pulls back to that level with light volume, 204, 192, if it drops below 192, Yamana Gold can run all the way back down to 152, 173. I'm not saying that's what it's going to do. I would be keeping my eye on about 204. But if we take a look at stock like, I believe, even Rand Gold, so we'll take a look at Rand Gold, GOLD. Oops, not golf. Golf is wouldn't be bad to go play some golf with you up in the San Jose area. But if we take a look at Rand Gold, what you're going to see is that same trading session from back here on October 12th. See how it's been able to take that level out? And that's just a stronger looking stock, at least being able to take out a level of resistance. So, and I'm not saying go out and buy that. It's just that Rand Gold and several others look stronger than Yamana did. Then it's just got that resistance level that's in play. Okay?
Okay. Sure. Thanks a lot. So, your recommendation for if I want to get into these gold stocks would be to go into the stronger ones?
Oh, absolutely.
Like AEM and Rand Gold.
Yeah, AEM is extraordinarily strong. It's another stock that was able to take out, didn't just said, hey, that Columbus Day was nothing more than maybe some manipulation going on. It pulled back with 2.5 million shares. You're already up today with 2 million shares. Yesterday, 3.8 million shares. It took out that resistance level like it wasn't even there. I mean, sliced right through it. So now you've got to time this with regard to gold as well. So in the case of gold and silver, I do believe that they are very overbought. And I take a look at their short-term price oscillator. And so it needs to start pulling back. Doesn't mean it's going to start today, but it needs to start pulling back. So yes, I would be looking at the stronger equities, and those are the ones that I would add to my portfolio. All right, my friend?
Okay, great. Thanks a lot, Steve. I appreciate your time.
All righty. That was Sam in San Jose, California. This is Steve Rhodes with TFNN. Dow's up 130. S&P's up 17. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 138. S&P is up 18. Had a request to take a look at natural gas. So let's first start off by taking a look at the ETF for natural gas, or one of the ETFs, the UNG. We can see natural gas here today, or the UNG. Let's start off with UNG. It opened up at a price point of 1177, and in essence sold off ever since. Let me see volume-wise. We'll just look at some 10-minute bars inside of UNG. So, boy, the big sell-off right at about 10:30. Maybe there was a release of some numbers at 10:30, right around that time frame. You had big volume coming out of it. We had another little spike in volume. This was the 10-minute bars we're looking at about 1:30 this afternoon. Let's go back to the daily chart out here. In essence, from a volume perspective, you can see that price is trading right back into, you've got two swing points down here, both within a penny of each other, either October 1st or the October 2nd day. And you're coming in with basically too much volume. October 1st had 7.7 million shares. You're at least trading inside the top of that. So you would have to see it, and I don't know what the volume is going to be at 4 o'clock. But if you did see a close above 1152 today, so it reverses some of these losses, and it does it with less than a volume of 7.7 million shares, you'd have a rejection of a swing point with price and volume. The next day, on October the 2nd at 1132, that's the high, 1 penny lower there. If price closes inside 1132, pretty darn good chance you're going to go test 1111. Pretty darn good chance. I can also make the case that it won't do that. And that case would be the following, and this would make it relatively easy from a trade standpoint. Now, I've got the continuous contract up on my screen at the moment. You want to base everything, but I'm sure that this is the same thing if I were to go pull up the current contract. That is, if I take a look at the little key reversal bar, bearish engulfing candle back in May 9th of 2015, and we just simply take a look at wave counts to the downside, way back here on October the 2nd, is where we saw a 7th wave move to the downside out here. Now, the UNG is going to be trading off of natural gas contracting, and this is the continuous out here. But I would say that setup, would allow you to. I'm not going to suggest that you take that trade, because on any time frame here, I haven't seen any kind of reversal. I'm just giving you the potentials out here. Now, natural gas, folks, typically in the month of September makes a seasonal bottom. If we take a look at the actual natural gas contract here, you'll see that it's off course for doing that. So it's this candle right down here in the current contract. October is the 2nd that you do not want to see a close below that level out here. So if you were to enter the trade, and you can see that at this stage here, the high of that bar, 268, was tested earlier today, and so we might be getting a rejection of that swing point, and that is a 7th wave, which oftentimes can be the end of a move, and it becomes pretty easy, because if there's just a one tick below the low of that, then that pattern is off the table, and you need to see some other type of reversal out there. So your back is up against the wall. Danny in Atlanta, if you'd like to go ahead and take a trade, somewhere right around now, or see how it trades tomorrow, would be the time if you're looking at UNG. Let's go back into those 5-hour charts out here with just a little bit of time. No, it wasn't the 5 hours, the 120-minute time frame charts. And what we can see here, the ES Mini clearly is going to close above its resistance level, which is the 2002 level out here. And you can see that the NQ now, it's done its work. It's made its way up to the top of its box, which is 43.84. That now needs to close above 43.84. And if that happens, you can expect the Dow to run another 973, another 25, another 35, another 40 points or so higher today. Stay tuned, folks. Our man David White is up next. I'll be filling in for Tom at 3 o'clock, so I'll be back with you. We'll take a look at some other things going on in the market. Otherwise, have a great day. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.